Tyler, it seems like this is something we are doing a lot lately. We say, hey, this stock is down 20%, 30% today, and they just reported earnings. What's going on? It seems like this is a thing that we're doing a tremendous amount lately, and here we are doing it again.
Yeah, it's not great when that happens, but there's a couple recurring themes with a lot of these ones where we're seeing this happen. I don't know, feels like a pattern.
Today, we are talking about Fisker. The stock is down about 23% after reporting earnings and some other things that we will talk about. Stock's down coming up on 60% so far year to date. It's not all bad news, but it's a lot of bad news. And some of the bad news is something they did not put in the press release at all. You have to get into the SEC filings to find it. I'm Jason Hall. This is The Smattering. We will talk about some of the good things that are going on and really going to focus on the things investors need to be concerned about. Before we do that, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. Go to fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. Okay, so first thing, what is Fisker and what do they do? Because there's a little thing that's a little bit different about Fisker than a lot of its competitors and peers.
Yeah, so Fisker is another startup EV company, which I think at this point, you say that and it feels like a dime a dozen, right? You got Lucid, you got Rivian, you got Tesla, you got, I don't know, we lose count sometimes of how many there actually are trying to make this happen. There's very much there was the Tesla broke through the wall of a startup automotive company. And so everyone started looking around and be like, whoa, maybe we can do it too. Fisker just happened to be one of them. Fisker also had some bona fides. Their founder, Henrik Fisker, was crucial in a lot of designs of automobiles previously, some in previous iterations of his life at other automotive companies. And they also had a unique business model. Instead of trying to ramp up and become big automotive manufacturers like you see with what Rivian is trying to do or what Lucid is trying to do by building their own manufacturing facilities, Fisker actually just says, no, we think we're really good at design and we're going to contract out our manufacturing. And so Fisker has contracted out a third-party manufacturing contract with Magna International, which is traditionally a components manufacturer. They pretty much made everything under the sun already. So why not just start putting
Why
the
not be the
parts
assembler
together?
too,
It was
right?
a new business model for them, which Fisker jumped on really quickly because it allows you to start up with a lot less capital than, say, a Rivian or a Lucid would. But there's also just the other challenges that come with this altogether, design
Well,
and
let's
sales and everything else.
it's worked pretty well for Apple, right? Using contract manufacturers for its products. It's the most profitable company in the world. The problem is that the folks at Fisker haven't exactly had Apple-like success at this point. So let's take a look at the quarterly results, talk about what the company reported, because again, there are a few positives, some things that are worth noting. The big thing that's worth noting is the company's actually delivering and selling vehicles now, Tyler, because if you go back a year ago, and it was starting to do that. Just looking at revenue, $72 million in revenue in the quarter versus, I don't know, less than 100,000 in the year ago quarter. So that's a positive. Started to deliver vehicles this year. And in particular, they said right here, what, 1,100 vehicles were delivered in the third quarter. They made almost 5,000 vehicles, but they delivered 1,100. And then after the end of the quarter, in October, delivered 1,200 vehicles. They delivered more vehicles than their entire third quarter's worth of delivery. So they are starting to actually get some sort of commercial traction.
Yeah, that would certainly suggest it. And I bravo on them to take basically what you did in a quarter and achieve it in a month is quite spectacular. It sounds promising, but it's also something that you want to dig into and you want to see what that translates into sales in the upcoming quarter. Some other things that obviously as a startup company, even though it doesn't have the manufacturing footprint that these other companies does, it's still running at a loss. It still has some pretty extensive general and administrative costs, marketing
Mm-hmm.
costs, all the other things that are associated with the operating side of this business, and is still generating heavy losses on that side. You're going to have to get to a point where it scales up to actually meet those.
And when you're
Weirdly,
having to when you're having to share part of the profits with a third party that's doing your manufacturing, even though you're not spending as much capital to build the plant, it stretches out the time before you get to that cash neutral, cash positive point in your business. And I think that's a really important thing to remember, Tyler. They are burning cash. They did take some steps in the quarter to start addressing that they raised, I believe it's around $400 million in gross proceeds. There's going to be some fees and stuff that'll come out of that, but they're going to come out with relatively close to $400 million in additional capital that will help them bridge that gap, right? As they continue to scale up the business. So that's a step in the right direction. But again, here's one thing that I want to talk about that's decidedly concerning. And again, they mentioned their manufacturing capacity. They manufactured 4,000 vehicles in the quarter, delivered 1,000 or about 1,100, then another 1,200 in the month. So there's another in the month of October. So there's at least another 1,000 vehicles they manufactured. They haven't delivered to a customer, right? This is their second quarter press release I'm sharing. And what's highlighted right here specifically, this calendar 2023 production forecast updated to a range of 20,000 to 23,000 units. When the second quarter, they reduced their forecast here to this 20 to 23,000 units. They completely removed any mention of their volume forecast in their third quarter press release. It was not mentioned at all. It was not disclosed. They have said they're dealing with some supply chain challenges. We also know that they cut the price of their most expensive vehicle, one of their most expensive vehicles. So that's the beginning of some of the bad. Go
To be fair, these are not uncommon things that we've seen across
ahead.
automotive in recent months. We talked not too long ago about General Motors slashing their target production rates because they wanted to focus on profitability. We've seen other companies cut prices because they're starting to see a little bit of waning EV demand. These are not uncommon for automotive, and this isn't like when we're talking about the things that are the reason we're being like, hey, this is not good. This isn't it. These are all things you can give a pass for because this seems to be
It's kind of
where
what's
it's going.
happening everywhere. Yeah, absolutely. And anecdotally, and I think my anecdote here applies broadly. I had pre-ordered the Ford F-150 Lightning. Like the day that they announced pre-orders, I did the pre-order. One thing led to another, and I wasn't going to be one of that first group. And I decided, okay, if I'm not going to get one of the very first ones, I might as well wait. And I can't remember how many emails I've gotten from Ford over the past 3 months asking me which Ford F-150 Lightning I'm interested in. And now there are plenty of both of those vehicles sitting on dealer lots now. You don't just have to order them to get them. So their demand has certainly slowed down. Supply broadly has apparently increased. But Tyler, this brings us back to me, and I think anybody that follows a company and invests, something that every investor needs to understand. And that's what the company disclosed to the SEC in an SEC filing, but they did not put in the press release, Tyler.
Yeah, and again, we've had a couple instances of this quarter, and people who watch our videos routinely in detective pattern, there's a takeaway here. Don't necessarily believe everything that's in, or believe what's in the press release, but it may not be everything that you need to know because sometimes they don't put what they have to legally disclose in SEC filings. And
Yeah,
that's where we
they
get it.
don't have to put it in the press release, but they have to disclose anytime there's a material change, they have to disclose it. So
Right.
what I'm sharing right now, this is the SEC's website. So I did a search for Fisker, and this is one that jumps out right here, the NT10Q. This is Fisker. They're notifying the SEC of their inability to timely file the 10Q. Okay. That's concerning when a company has an inability to file the 10Q. And then you get into that filing, and this is what you learn. The company determined that it has material weaknesses in the company's internal control over financial reporting. These material weaknesses will be discussed in the report. TBD, Tyler. And it's never good news when a company says that our internal controls have material weaknesses. That means you can't trust the financials.
Right. And that was part of the reason why when you saw that press release, we didn't get the financial statements all the way at the bottom and everything that you want to expect to see when it comes to these because they weren't ready. It said in another notice that on effective just October 27th, their chief accounting officer had left and they didn't have one in place for the filing. And they had just appointed a new one as of November 6th, so last week. And they basically said without unreasonable cost and time, and they couldn't have somebody put together their quarterly statements in a week, which is not wrong. That seems reasonable, but at the same time, if you're sacking your chief accounting officer 2 weeks before you have to report your earnings and you don't have some sort of effective transition or some plan on how to do this effectively, it normally means things aren't looking hot on the inside.
And you have to make sure they are. You cannot risk filing and then after the fact there be a problem. So I think even if it turns out that there is no real material weakness, they do the full process, they have the right people in place, and they get their books in order and they verify everything is correct. This is not the time to buy on the dip. I want to stress that, right, Tyler? You have three things. You have a company that's already consuming cash and having to raise cash just to keep the lights on, that does have ambitions, and we've seen some positive steps forward, but is also dealing with near-term weakness in demand as its biggest competitors continue to do the same thing that it's doing, and that's try to ramp up to take share in the market. And now the last thing is that they're saying, hey, we're not 100% sure that our books are right. We have material weaknesses in our reporting, so we have to verify it. So I think this is absolutely one of those times that investors have to step back. You have to wait. You have to let the company go through their due diligence and then present something and file it with the SEC that management says, okay, we're confident in this. The board has a fiduciary responsibility. The key signatories sign off on it and say, okay, we're legally bound now that we say that we're confident that this is correct. They file that and then completely reevaluate the still concerning fact that you're buying a business that is burning cash, dealing with cyclical pressures, and their ability to get through this into that secular tailwind that's there, the growth of EVs. I think investors really need to be super cautious right now.